welcome back to another episode of the Jack Mallers Show. I am your host, Jack, and you are tuning into another episode of Mailbag Monday, episode 87, Bitcoin, the debasement trade, in air quotes. I think it's a lot bigger than that. Ladies and gentlemen, we had a Bitcoin crash on Friday night. We've got Bitcoin rebounding today on Monday. China and the United States are fighting again. AI continues to disrupt the white-collar worker. What was it like to run strike behind the scenes during a $20,000 hourly red candle on Bitcoin? Let's get into it. Today is going to be a banger. So without further ado, here we go. I'm talking to you all at a Bitcoin price of $115,900 US dollars. Bitcoin's market cap has dropped from 2.5 trillion to 2.31 trillion US dollars. Not too shabby. Its all-time high is $126,160. We're about 8% down, not too bad, from its all-time high, which was established on October 6th, a week ago today. For those that keep track in Bitcoin block height, the last Bitcoin block that was mined, as I'm recording this live to you now, was Bitcoin block 918,932. It's so good to see you all in the chat. Today's going to be a lot of fun. So much is happening. A lot of what we've been talking about on this show continues to play out. So a fair warning, this show may be a little longer than usual, but I just couldn't help myself. I had to err on the side of content, of pure truth, of facts. And so if you want to skip through parts of this, you can, but this is going to be a banger. I spent all day preparing for this one. I could not be more excited. Let's go. So, title of this show, Bitcoin, the debasement trade. But I put debasement trade in air quotes because that's what Ken Griffin is calling it. That's what Larry Fink is calling it. That's what Jamie Dimon is calling it. That's what the Wall Street Journal is calling it. I think we're in a monetary regime change. I think we're in a monetary transition. I think the 1971 dollar is dead, and I think that Bitcoin is becoming the world reserve currency. And so we'll talk about this debasement trade, so to speak, all the geopolitical fighting that's going around the world and what it means for our good old orange coin and yellow rock for that matter. First chapter, the week the empire blinked. Again. So it's funny. We're seeing this now as a recurring pattern in the United States. You'd have to rewind only to April to remember the last time we had market chaos and a seeming dysfunction in all relevant markets in the United States of America. That was the so-called Liberation Day or Liberation Week, where all of us Americans felt oh so liberated. Interestingly, the Trump administration could not muscle through a full week of their liberating plans before they reverted on everything, delayed the Chinese tariffs, delayed many of the tariffs, reneged on most of the tariffs because the Treasury market dysfunctioned. You saw stocks down, bonds down, yields up, dollar down, gold up. That is a flight out of the U.S. As a country, we've hyper-financialized. This post-1971 dollar means because of globalization, we don't produce any of our stuff. We only mainly export the dollar is our main export, and we've hyper-financialized. And so we have an inability to garner any leverage and to negotiate with anyone like China for many reasons, one of which is because we rely solely on our financial markets and our financial instruments. And if they don't like it, we don't like it. So let's break down what exactly happened. So I've talked about rare earths on this show a lot. Rare earth minerals. These are the physical commodities that are required to produce most of the things that we all enjoy, especially technology and also military equipment. I'm going to say that again, guys. Rare earths, because this isn't common knowledge, right? Like, why the fuck, you go off, you're a teacher, you're a doctor, you're a sports coach. Why would you care about rare earths? You expect the world to be peaceful. You expect your money to store its value. You expect the sun to come up tomorrow. What are you going to sit around and read documents about rare earths like a nutcase like me? You wouldn't do that. I wouldn't expect you to do that. So rare earths are physical commodities, meaning this isn't something you can just print out of the sky. You have to dig it out of the ground. You have to refine it. It takes a lot of work to take things like the raw materials of planet Earth, right? We're talking about productizing Mother Nature, right? You've heard me say before, a lot of the human story is commercializing energy from the sun. And I love that idea because really what we've been able to do is commercialize Mother Nature, the very minerals around us, the bits and pieces that we were born into, and productize it and increase the level of prosperity for us as a species, allow us to have more kids, live longer, enjoy the human experience better. Okay, so rare earths have been a critical piece of that. Okay. Unfortunately for me as an American, but maybe fortunately for China, is they now dominate the production and the refining of rare earths. There are two pieces. There's actually getting them out of the physical universe, and then there is refining them and making sure that they are ready to be used. Now, us as Americans, we don't produce anything anymore. This was part of us taking over the role of being the world reserve currency. This was part of the post-1971 dollar. And when I say that, I mean our divorce from the gold standard. The dollar's not backed by anything anymore. We can print it at will. And when we decided to take on that role, we made a very conscious decision to let the rest of the world produce stuff for us, and in return, we will print them and give them dollars. And that has very disastrous effects because we can't go to war with China. We can't enact a trade war with China because China produces all the parts. Who would win the war? Well, there would be no war because one of the participants produces the parts. And so fast forward to today, China is the dominant rare earth producer and refiner. So what happened on Friday? On Friday, China unveiled sweeping rare earth export controls to protect what they called their national security, okay? From Reuters, China expands rare earths restrictions, targets defense and chips users. China curbs export of 5 new rare earth elements. New rules come weeks ahead of Trump's meeting with China. Foreign producers who use Chinese tech, material required to comply, foreign semiconductors users will face more scrutiny. So let's get to brass tacks. I really liked this tweet from Aaron. Let me zoom in on it a little bit so that you guys can see it. From Aaron because it wasn't written by some mainstream journalist that has a bias. He wrote, China just weaponized the entire rare earth supply chain. Get used to reading Chinese MOFCOM bulletins because they're the ones writing American industrial policy now. Announced today, any product containing over 0.1% Chinese rare earth materials needs Beijing's approval before re-export to third countries. Doesn't matter if you manufactured in Taiwan, Vietnam, or Texas. Chinese dysprosium, don't know that word, in your magnet, Chinese gallium in your chip, Beijing gets veto power over the sale. This is the nuclear option. The United States has spent 3 years trying to deny China access to advanced chip-making tools. China just responded with a chokehold on literally every semiconductor fab, AI data center, defense contractor, and EV manufacturer on Earth. Everything runs on Chinese rare earths. Building alternative supply chains takes 5 to 10 years minimum, and I would challenge that personally. I think it's 10 to 20 years. 10 years minimum, not 5. We don't have 5 to 10 years. Effective December 1st. The AI boom just hit a hard ceiling, and we're still pretending we can offshore our way to prosperity. Time to reindustrialize like our lives depend on it, because they do. I could not agree more with this. We've been saying this on this show over and over and over again. What is the MAGA movement? What is the Red Party in the United States? What is Trump trying to do? Reindustrialize the United States of America. And to be honest, I've considered that bipartisan at this point. Whether you're left, right, blue, red, the post $71 has ran its course. It now is a net negative to the United States and its people. The fact that we cannot produce our own products, our own materials, defend ourselves by producing our own military equipment is a serious problem. We've gone so far off the deep end of just printing pieces of paper, deindustrializing ourselves, exporting the very proof of work required to live the quality of life that we feel entitled to. It is no longer tenable. So the United States of America has to find a way to reindustrialize. Now, newsflash, which we'll get into, how else are they going to do that without printing money? Who do you think is going to pay for that? You think China's going to pay for that? Newsflash, they said, go fuck yourself if you think we're paying for that. So the result is there's going to be an immense amount of money printing, an immense amount of dollar debasement. The U.S. dollar and U.S. treasuries in particular are no longer sufficient collateral for the global financial system. And we're watching this all play out in real time. Another tweet I liked, I did a translation of all 6 related announcements here. Today's actions go way beyond semiconductors. Your company needs to drill bits for oil and gas drilling. You're going to need a PRC license. The PRC just showed that it can control the supply chains for new quality productive forces globally. I am skeptical that this is just signaling as part of the U.S.-China negotiations. This seems more like the PRC saying, enough, no more screwing around, and calling the United States bluff. How the Trump admin responds is going to be interesting. The U.S. does have areas of real leverage with the PRC, but so far has been unwilling to exercise that leverage, and if they do now, the escalation cycle is going to accelerate and get increasingly painful. Today's announcements are numbered 55, 56, 57, 58, 61, and 62. They issue these in sequence, so there must be a 59 and a 60, but those have not been published. What are they? So I've said on this show over and over and over again, the United States does not have the leverage. The mainstream media notion, or what Trump wants you to believe, that we have them where we want them, is not true. We have gone so far off the deep end of fiat maximalism, printing pieces of paper. We do no real proof of work. Us as a country needs to get back to reindustrializing, proof of work, being able to stand on our own 2 feet. I don't believe this will result in a hot war. I don't believe that there's going to be any serious conflict. In fact, if anything, China's been the one that doesn't want any conflict. Anytime things get hot, China threatens rare earth, sanctions, export controls, whatever, and the world cools off. But this shows all of us, guys, where the world is going. China is saying, your U.S. dollar system, your U.S. Treasury system is dead. Stop it with the games. Quit toying around with those printed pieces of paper. Nobody wants them. We're moving back to neutral reserve assets. Good day and good night, Mr. Trump. So what did Trump respond with? Let's go. His first response was this very long post, and this is what kicked off Bitcoin's tumble down $20,000, but all the markets throughout the world. Trump said some very strange things are happening in China. They are becoming very hostile and sending letters to countries throughout the world. And they want to impose export controls on each of every element of production having to do with rare earths. There's that very magical mineral. And virtually anything else they can think of, even if it's not manufactured in China. Nobody has ever seen anything like this, but essentially it would clog the markets and make life difficult for virtually every country in the world, especially for China. We have been contacted by other countries who are extremely angry at this great trade hostility, which came out of nowhere. Our relationship with China over the past 6 months has been a very good one, thereby making this move on trade an even more surprising one. I've always felt that they've been lying in wait, and now, as usual, I've been proven right. I'm not going to read the whole thing, but this was Trump's initial reaction. He goes on to say at the bottom that he was considering extreme tariffs in reaction to what China just did. Now I'll fast forward a little bit, and he did just that. So later on, he followed up and he posted, "It has been learned that China has taken an extraordinarily aggressive position on trade and sending extremely hostile letter to the world, stating that they were going to, effective November 1st, 2025, impose large-scale export controls on virtually every product they make, and some not even made by them. This affects all countries without exception and was obviously a plan devised by them years ago. It is absolutely unheard of in international trade and a moral disgrace in dealing with other nations. Based on the fact that China has taken this unprecedented position and speaking only for the United States of America and not other nations who are similarly threatened, starting November 1st of 2025 or sooner, depending on any further actions or changes taken by China, the United States of America will impose a tariff of 100% on China, over and above any tariff that they are currently paying. Also, on November 1st, we will impose export controls on any and all critical software." That's a big one, software. So you're starting to understand where the United States feels it has leverage. Well, newsflash, it doesn't have any, but where Trump wants to pretend that it has leverage. "It is impossible to believe that China would have taken such an action, but they have, and the rest is history. Thank you for your attention to this matter." And so this, guys, we're just redoing Liberation Day all over again. So you saw stocks down, Bitcoin down. I've said before, Bitcoin is the most accurate gauge on liquidity. Bitcoin is the smoke alarm, and it goes both ways. That means over the last 15 years, it's been the best performing asset in human history, bar none. I don't give a shit what early startup you were a part of, what gold your dad gave you as part of your inheritance plan. It doesn't matter. No one has outperformed Bitcoin, and it's for that reason. But that also means on the downside, when markets are in turmoil on a Friday night, Bitcoin's the only 24/7 free market at significant scale globally that everyone has access to. And so Bitcoin, to me, is the ultimate truth machine. There is no other market open 24/7, accessible to everyone, and truly free. It is a truth machine. And so you saw markets across the board freak out, start to print red, and you saw Bitcoin lead to the downside because the world started to ensue panic. Now, here we go. Look at that. Look at that candle. That's a 12-hour candle. So Bitcoin went from over $120,000 to around $100,000 was the low it printed in a 12-hour time span. Insane. For context, this was the biggest liquidation in the crypto market's history. And we'll get to that in a second. Obviously, you guys know Bitcoin, there is no second best. But for context, the COVID crash was over $1 billion in liquidations. When Sam Bankman-Fried stole $10 billion from everybody, there was a little over $1 billion in liquidations. On Friday, there was almost $20 billion in liquidations across the cryptocurrency sector. That is the biggest liquidation event in this industry by far, in order of magnitude bigger, 20 times as big almost as other massive events in this space, just for context. Now, I don't want to show you guys that yet. When this happened, obviously, I'm the CEO of Strike. I'm the CEO of 21. So I get on the phone. I get in meetings. We start solving things for customers. We get to work. But I immediately texted some of my buddies, and I said, how long do you think until Trump reverts? Until he posts and says, you guys know I like China, right? You guys know that it's not like we're not going to come to terms. We're not going to find a deal. I'm still going to take the meeting in China. How long until he pussies out? Because like I said, we have no leverage. We are a hyper-financialized country. We rely solely on our stock market to finance both our interest payments and as a form of export globally. We can't afford for the S&P 500 to open up 10% down, 20% down, and persist. We would default as a country. This is what we saw Liberation Day. I texted immediately, buy the dip. I'm texting my family. I'm texting my friends. Buy the dip, buy the dip, buy the dip. Liberation Day 2.0. Liberation Day 2.0. Unless you believe that the United States of America is willing to live through a form of austerity, a Great Depression greater than any other depression in the history of humanity, if you think the American people will vote for that, will not riot against that, and that the Trump administration has the cojones to realize the loss themselves and eat it like a man, buy the dip. The only way out is for them to print the money. They can flex and taunt with their Twitter fingers all they want, and I'm going to get into this. You guys know I'm not a left or a right guy. I'm not a blue or a red guy. I'm an orange guy. I'm a freedom guy. I'm a distributed networks guy. I'm a son of the internet. Okay? But this is how the game goes. They're playing politics. You get on, you talk a big game, you show everyone that you have the cojones to stand up to China because Joe Biden didn't. And I text my friends, how long until we get a reversion? Ladies and gentlemen, it wasn't even 24 hours. JD Vance, I talked to Trump yesterday about China. We appreciate the friendship Trump has developed with Chinese Yi. Trump's willing to be a reasonable negotiator with China. Trump hopes the U.S. doesn't need to use leverage on China. We appreciate the friendship that we have with China. Then the man himself comes out and says, don't worry about China. It will all be fine. What are you guys selling everything for? Stop. Don't do that. Don't do that. Click the buy button. Click the buy button. Highly respected President Yi has had a bad moment. He doesn't want depression for his country, and neither do I. The USA wants to help China, not hurt it. I immediately sent this. This is a screenshot from my group chat. I immediately sent this to my group chat, and I said, boom, there it is, the reversal. Like clockwork, baby, we are back to up only. So we were in the 104s, 105s, 106s during peak bluff. During peak, we're going to pretend like we can jam the dollar down people's throats. We're going to pretend like the world actually wants U.S. treasuries. And I say, wait for the reversal. Do not get fooled. This is Liberation Day all over again. We just did this in April, you guys. Do people have that short term of a memory? We just did this. Trump came out and said, we're going to force everyone else to pay for the United States' mistakes over the last 50 years. We've wasted $37 trillion and gotten nothing in return because of fiat maximalism. How are we going to solve that problem? Well, we're going to force everyone else to pay for it. That lasted about a week before we reverted on it all, started printing money, and markets kept going up forever. Same thing goes here. Now, I don't know if the bluffing is over. Who knows? Maybe Trump gets out and he tweets, tariffs back on. I'm telling you right now, they have to print the money. The post-$71 is over. It's over. These are temporary. Buy the dip. Stay humble. Stack sats. Avoid leverage that isn't responsible. I'm telling you. You guys want to know why the market crashed and why it's rebounded since? It's as simple as this, guys. It's as simple as this. In fact, do you want to know who explained it in plain English? Guys, Putin. Putin did. This is from Putin in 2022 when the United States sanctioned them off the global financial system. He said, and I quote, according to the IMF, global currency reserves are at 7.1 trillion and 2.5 trillion euros now. $7.1 trillion and 2.5 trillion euros. These reserves are devalued at an annual rate of about 8%. Okay? That makes sense. That's higher than the 2% inflation CPI target that us plebs get tricked into believing from the Federal Reserve, isn't it? Anyways, I continue. Moreover, they can be confiscated or stolen any time if the United States dislikes something in policy of the states involved. I think this has become a very real threat for many countries that keep their gold and foreign exchange reserves in these countries and currencies. According to analyst estimates, and this is an objective analysis, A conversion of global reserves will begin just because there is no room for them with such shortages. They will be converted from weakening currencies into real resources like food, energy commodities, and other raw materials. Other countries will be doing this, of course. Obviously, this process will further fuel global dollar inflation. You think I'm an idiot that wears hoodies and has the empty closet, blah, 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 blah. Putin says it. Ken Griffin's saying it. Ray Dalio is saying it. Larry Fink is saying it. Jamie Dimon is saying it. Sorry, the Bitcoiners were right. Tough pill for a lot of you guys to swallow out there that like to hate on us. Sorry. Now we got to make a decision. You want to prosper or not? I don't know how else to put it to you. The world is sick of printed pieces of fiat. The gig is up. The game is over. You have to own something else. And the decision is yours. Do you want to own a yellow rock? Do you want to own the euro, the pound, the dollar? Do you want to own equity in a company that you don't know much about? You don't know the leadership team. Is it valued properly? Is the multiple too high? Don't kid with yourself. You have no fucking idea. Or do you want to own the only scarce thing we've ever invented? Ever. That's the thing, guys. You can't get diluted owning Bitcoin. There's only 21 million. This is the point. We uniquely, the timeline we're living through is insane. I both feel bad for the everyday man that's getting up and busting his ass and not making progress, because what a timeline to be alive and have to live through unknowingly. I also feel blessed. We are in the heart of change. This is fun. We're living through the change of global monetary policy. Listen, I wake up every single day and I work on the best money humans have ever come across to solve the hardest problems we've ever faced. This is incredible. We're all a part of this movement. And it's the coolest thing is that we all play a role here. We all have an equity stake in what our future is going to look like. But guys, make no mistake. What happened on Friday? What happened since? Is China and the U.S. fighting? Yes. Yes. The United States is trying to perpetuate the little marginal pieces of the 1971 dollar that still benefit them. And the world has had enough. We are moving on to neutral reserve standard. I toss this in here just for the shits and giggles, but I could do this literally every day if you guys wanted. Latest data from the IMF shows that the Central Bank of Brazil increased its gold reserves from almost 16 tons in September, its first addition of gold since July of 2021. You have to own real things now. Pieces of paper and empty promises no longer cut it. And this is a phenomenal thing for humanity. We are meant as a species to be governed by the physical laws of the universe, by Mother Nature. That's where we are best. Humans don't prosper and don't do well in some fabricated version of Narnia that a bunch of unelected weirdos invented, where value is measured by pieces of paper that someone can print out of thin air. No man should work for what another man can print, period. And as Bitcoiners, we know this, that if you want real stuff, you need to own real stuff. If you own dollars, you get less oil, less housing, less food. If you want real stuff, you need to save in real stuff. If you own Bitcoin, you get more housing, more oil, more food. It's that simple. This is Bitcoin against oil. So none of this is new to us. If you've been a listener of the Jack Mallers show, you don't need to literally translate Putin's speeches like I do and hear what the hell he's talking about over there. You don't have to do that. You tune into this show, you know you got to save in something that no one else can print. No one else can dilute your work that you get up and do every day for the people around you and your family. That's the only way out of this. You know this. We all know this, right? This isn't news to this show. That's why I put this in here. Shout out to this listener. To Jack Maller's credit, he said on his Monday shows for the past 3 weeks that China could strong arm anyone they want because of their monopoly on rare earths, like they just did. Kind of a sick call. Kind of a fucking sick call, bro. That's how we do it on this show. Truth. No ads, none of that bullshit. I'm not here with a hidden agenda. I run 2 of the biggest Bitcoin companies in the world. I'm a normal 31-year-old dude that just wants the world to be a better place. I'm here to change. I'm part of the movement. We've been calling this from months ago. Stay humble, stack sats. The U.S. is bluffing with any leverage they have. We have to reindustrialize quick. The only way out is by printing money. We're going to see some form of yield curve control. We're going to see some form of UBI. And it's not a bad thing necessarily. That's the other thing people have to get through their heads. I'll hang out with friends. I'll go to the sauna. I'm sitting in the sauna having conversation with people about financial markets. Oh, Jack, is that you, Bitcoin? Can you answer? Yeah. What's the question? People say, is it a good or bad thing? Good or bad thing for who? Depends. If you own Bitcoin, if you work hard, if you're honest, if you're truthful, if you're principled, if you spend less than you make, it's a great thing. Bitcoin's going to go way higher. You are early to the new world reserve currency. You are sovereign. You are principled. You are healthy. It's a great thing. If you own no hard assets, if you buy into the lies, if you don't take care of yourself, if you aren't prioritizing sleep and a clean diet, if you think like the Harvard Harvard Health Division is saying Snickers is better for you than steak. If you believe that shit and you eat Snickers and you have all your savings in a Chase account and you aren't prioritizing your sleep, no, this is very bad for you. Very bad. So it depends, guys. Is this good or bad? Should I be concerned or not? Stop delegating the future of your life and your family in our country, in our species, to anyone else but yourself. Stop asking the government or a fucking podcaster like me if it's good or bad. You decide if it's good or bad. Be a fucking man. That's my message to everyone out there. Grab life by the balls and go buy some Bitcoin. Come on. Buy some Bitcoin. Go to the gym. Fall in love. Have kids. Do the right thing. Is it good or bad? I don't know. You want me to answer that for you? What are you, my fucking child? Anyways, so people in the sauna asking me, so like, should I be happy or sad? What? I don't know. What a pussy. Anyways, come on, guys. We got this. My generation, we got this. We got to wake up, smell the coffee, all right? Just because you're American, you don't just get life handed on a gold platter. You got to work for it. Think for yourself. Have your own opinions. Question things. Don't be afraid to fail. We got this, but we got to wake up. We're in the game. We're in. It is halftime of the Super Bowl right now, okay? Bitcoin and gold are being adopted as global collateral. You have an opportunity right here to prosper and build the family you've always wanted and make your mark in history. But you got to realize that you are playing in the Super Bowl, whether you like it or not. Got to get out there and put your helmet on and go hit somebody, okay? And just to show you guys further on that the U.S. is taking this seriously, this is from the Financial Times. The Pentagon steps up stockpiling of critical minerals with a $1 billion buying spree. So keep your eye on the United States continuing to spend money on real stuff with their printed pieces of paper. Okay? This is the signal for me. We're going to continue to print money to buy real things. That is dollar debasement. That is fiat inflation. That is the death of the 1971 dollar. Do you understand? Okay. Whew. First chapter over. Let me get some water. Next chapter. The U.S. sells treasuries to buy rocks. So I just hinted at it. We're going to continue to it. So a lot of Bitcoiners were upset that the U.S. government bought $20 billion of Argentine pesos, but not the Bitcoiners that listen to this show, because we said on this show last week that the United States was doing this not because we want to literally own Argentine pesos. Come on, nobody in their right mind believes that. We're doing this because Argentina is a naturally rich land. It's naturally rich soil. They have a lot of physical commodities that we want. And if we did not give them the loan, do you guys have a good guess on who would have given them the loan? Ding, ding, ding. You guessed right. Unless you're a moron. China. Okay? So we didn't have a choice. This is the same thing as the Pentagon buying $1 billion worth of stuff. The Treasury bought $20 billion worth of stuff. Call it a loan to own. You ever heard that? A loan to own? Yeah, you give the guy a loan, but the guy you're giving to a loan to, you got him by the balls. Loan to own. You know they're going to default. What, we expect Argentina to pay us back? On what planet? They haven't been able to pay anyone back since I've been born. They're not paying us back. This is a loan to own. Now, the interesting thing about this with Argentina that I want Bitcoiners to understand is this. If the United States is willing to do this, what else are they willing to do? That's the signal. What Bitcoiners are missing there, the government told us they'd buy Bitcoin and they bought Argentine pesos. Yeah. Okay, I understand that. That's a fun headline, and I know it gets the Bitcoiners wound up, and you're not wrong. You're not wrong. But what's actually happening here is the United States has to reindustrialize like our life depends on it. We are so short on natural commodities that we need to produce real stuff. We don't have fuck all in this country right now. All we have is a bunch of people in San Francisco making technology and a bunch of people on Wall Street making financial products. That's all we have. And so we have to reindustrialize. And so the ultimate priority at this very moment in time for the United States is to get their hands on allies that have the real stuff. That's what this was. Now, the fact that the United States went through the U.S. Treasury, not the central bank, not the Fed, this wasn't a swap line, the U.S. Treasury used the Exchange Stabilization Fund to give Argentina $20 billion. We're literally printing dollars to get real stuff. That is currency debasement. All of a sudden, it's not that far-fetched for me to think that the United States won't print money to buy Bitcoin. The United States is telling you through their actions where we are at in the post-$71 era, that it's ending. We are literally printing money to get our hands on real stuff. What do you guys think is worth more? The printed shit or the real stuff? Commodities or fiat? Bitcoin or dollars? It's a very, very simple, you just have to watch what they're doing. From Luke Groman, the U.S. government is selling U.S. treasuries to buy commodities and selling U.S. dollars to buy Argentine pesos. And you're trying to call a top in gold? You're looking at me and saying, oh, that was the Bitcoin top. Have you lost your mind? Did you hit your head? Did your mother drop you when you were a child? Hey, and listen, the best thing about a free market is you guys can think I'm wrong. You can bet that I'm wrong, and someone will be right. The free market will decide. But if the U.S. government is selling treasuries to buy commodities and selling dollars to buy Argentine pesos, which by proxy is more real commodities, and you're trying to call a top in Bitcoin? Have you lost your mind? No way, Jose. Now, Mr. Besant is not only rescuing Argentina, he has declared unconditional support for Mr. Milei. A Treasury official says that Argentina's may be the first of several bailouts from America on similar terms. This is just the beginning. Loan to own. print fake pieces of paper that the world was fooled to have value over the last 40 years. Buy real stuff. So my message to you all, if you are getting paid, take the pieces of paper, get yourself some real stuff. If you have savings, take the pieces of paper, get yourself some real stuff. Do what the United States is doing at this point, dumping their dollars for real stuff. It could not be more clear. The United States, here we go with them taking equity in companies. It centers around the production of real stuff. U.S. to take 10% of Trilogy Metals to unlock Alaskan minerals. The U.S. will take a 10% stake in Canadian minerals explorer Trilogy Metals, Inc. as part of a $35.5 million investment to secure critical energy and mining projects in Alaska. The White House is reversing a Biden-era decision to reject Ambler Road, a project to help across vast critical mineral deposits in Alaska's northern Brooks Range. The U.S. deal with Trilogy Minerals includes warrants to purchase an additional 7.5% of the company and is part of the Trump administration's effort to counter China's dominance of the industry. Okay? The United States is going to continue to print money, bail people out, print money, prop up markets, print money, buy real stuff. This is the era of reindustrialization. This is unwinding from the post-$71. This is the hard money era, the neutral asset era. Which brings me to the third chapter. Neutral reserves have already won. People say, when will Bitcoin win? My brother in Christ, we've already won. We've already won. People just haven't realized yet. This was today. Gold, another all-time high. Gold breached 4,100. It's just up only for gold. And people are saying, well, gold's getting really toppy, right? Is this the top? Guys, I think gold's going to like 10,000 over the next few years because people keep calling this a debasement trade. That's why I put it in quotes for the title of this. Oh, it's a debasement trade, a debasement trade. It's not a trade. It's not a trade. This is the new normal. The world has to be collateralized by real shit. If you don't own gold, if you don't own Bitcoin, no one can take you seriously. If you're a country and you want to do business, you want to export, you want to trade, okay, what do you have over there? Oh, we have a bunch of U.S. debt. Oh, never mind. Don't talk to me. That's what's happening right now. And you guys are calling tops. Fiat has no bottom or Bitcoin has no top because fiat has no bottom. Like this thing can go forever. These things, we've already won. You guys think the dollar's fucked? Shout out to my people in Europe. The euro is more fucked than the dollar. The yen is more fucked than the euro. The pound went from world reserve to absolutely irrelevant. Buy gold, buy Bitcoin. So simple. I could not agree with this tweet more. What if stock market gains were measured in gold instead of dollars? As John Authors notes, denominated U.S. stocks in gold rather than dollars, and they've been in decline since the dot-com bubble burst 25 years ago. Guys, we've already won. Gold has now been outperforming the stock market, and Bitcoin's been beating the shit out of gold. Gold's performed 112% over the last 5 years. Bitcoin almost 1,000%. We've already won. The world just hasn't realized yet. The debasement trade is in overdrive. Gold has recently climbed much faster than global liquidity, a clear sign of growing mistrust in the monetary system. A clear sign that the post-$71 is dead. Finito. Goodbye. Rest in peace. Good riddance. The chart below is from the IMF. Despite the significant surge over the past 2 years, I suspect this trend has more room to run. The primary driver is the ongoing effort by some central banks to diversify their reserves holdings and reduce their reliance on the U.S. dollar. Guys, it's happening in real time, and we saw our first massive sovereign wealth fund, our first massive country purchase in a while into Bitcoin. I've said it before. Gold is just much bigger than Bitcoin. It has a lot more history than Bitcoin. So why are central banks not buying gold? For that very reason. But why are they not buying Bitcoin? They're not buying Bitcoin yet. It's not they will never buy Bitcoin. It's yet. Why aren't countries buying Bitcoin? Why aren't central banks buying Bitcoin? Because it's too small. Because they don't know how to custody it. Because they don't know how to do it. but they're working on it. And this was just in over the last week. Luxembourg Sovereign Wealth Fund allocated 1% of its $900 million portfolio, so about $9 million to Bitcoin ETFs. It's coming. It's coming. I expect companies to move first, which we've seen with MicroStrategy, with 21. We're going to be big buyers of Bitcoin. We have been. We'll continue to be. Then I expect sovereigns, countries, eventually central banks. 100%. This from our good friend Marty Bent. It's happening again. Most people just don't realize it. I thought this was an incredible tweet. On the left is gold priced in the Weimar marks, that hyperinflationary time. Everyone has seen that. Look at that chart of the Weimar priced in gold. Now, look at the chart on the right. That is Bitcoin priced in dollars. Looks eerily similar, doesn't it? People say, we're not going to live through hyperinflation. Well, in what? In Bitcoin terms, we already are. If you don't get to stacking some sats, if you take your sweet time, to the friends I grew up with, 13 years ago, I told them, buy yourself some Bitcoin for your future self, for your family. Buy yourself some Bitcoin. They say, I'll just wait to see if it works. Okay. Well, at the time, they could have bought one Bitcoin for $50. Guys, I gave my friends Bitcoins for Christmas over 10 years ago. That's how good of a fucking friend I was. They wouldn't buy it. So I literally was handing out Bitcoins for Christmas, like plural. Nowadays, they waited to see if it works. That $50, how much does that $50 get you? One Bitcoin? No. Well, okay, half a Bitcoin? No. A tenth of a Bitcoin? No. One Bitcoin's now $115,000. That's hyperinflation. Hyperinflation against what? I'd keep an eye on this. I would not be surprised if we look back and the gold to dollar chart looks like the Bitcoin to dollar chart looks like the gold to Weimar Marx chart. 100%. And here we go with this bullshit. A new Wall Street trade is powering gold and hitting currencies. Investors worried about the future of the dollar and other major currencies are piling into gold, Bitcoin, and other alternative assets, powering what has become known on Wall Street as the debasement trade. And listen, I love that people are getting on the bandwagon of what we've been talking about on this show and what I've been talking about for the last 13 years of my life. Fiat currency is immoral. It's unethical. No man should work for what another man should print. It is the disease that is sickening society. We need to fix it. I love that Wall Street, Ken Griffin, and all these guys are getting on board. It's great. But what I will not allow is for them to categorize it and brand it as a trade. Like, oh, Ken Griffin's new sick trade is this whole debasement thing. It's not a trade. Bitcoin is a solution. It's not a hedge. These guys are still so fiat-minded. They're such fiat maximalists. They're like, oh, yeah, that's a sick trade. This is a sick hedge in my sick hedge fund portfolio. They don't understand that we are living through a new monetary regime change. And people can say, you think you're smarter than Ken Griffin? When it comes to this, yeah, I do. I have a lot more Bitcoin than Ken Griffin does. That's the thing. If Ken Griffin was smart, his entire portfolio would be Bitcoin. He'd be the best performing hedge fund in the history of hedge funds. But I've outperformed Ken Griffin sitting in this empty closet by myself. It's not a trade. It's not a hedge. Bitcoin is a solution, not a hedge. Bitcoin is a solution, not a hedge. Citadel's Griffin calls gold or rush to gold a safer asset concerning. Citadel's Ken Griffin said investors are starting to view gold as a safer asset than the dollar, a development that's really concerning to him. Griffin stated that the United States is seeing fiscal and monetary stimulus akin to what normally happens during a recession, which is stoking markets, and described the U.S. economy as being on a bit of a sugar high. Griffin said the $100,000 cost to keep employees on H-1B visa won't be a major hit for his company, and instead worries about talented students choosing not to come to the United States at all. Here we go. Ray Dalio echoes Ken Griffin in seeing gold as safer than the U.S. dollar. So we're seeing all these guys, but I think what the world is missing is this is not a trade. Like they think, oh, I'm going to catch gold from 4,000 to 5,000. Gold could go to 10,000. Oh, I'm going to catch Bitcoin from $100,000 dip to 130,000. Bitcoin's going to go to $1 million a coin. So this was from Groman. This is from Luke Groman. This was just a mic drop. Like, this was so well written. I'm just going to read it word for word. It's a little long, but it's unbelievable. With all due respect to both gentlemen, so he's talking about Ken Griffin, Ray Dalio, and everyone else, Jamie Dimon, Larry Fink, all these guys. With all respect to both gentlemen, they are summarizing a view held by the Wall Street Journal and by many U.S. investors that we think vastly oversimplifies what is actually going on that is driving gold higher, in which our view is likely to continue to drive gold far higher in coming months, quarters, and years. It is not simply unease about financial markets, but also the U.S. government is literally selling U.S. dollars to buy Argentine pesos and buy commodities around the world, because the U.S. now finds itself having been wrong about its 40-year economic strategy that can be summarized as long U.S. dollar, long U.S. treasuries, and service jobs in short commodities, short factories, and short gold. While China has spent the last 20 years taking the other side of that trade, going long commodities, long factories, long gold, and short the dollar and short the U.S. Treasury. Now the U.S. suddenly realizes it pursued a penny-wise, pound-foolish economic strategy that leaves it dependent on China for its military and weapons production. But the fact that the U.S. offshored so much of its industrial base to China means the U.S. cannot reshore to fix this without spiking inflation to levels that blow up the U.S. Treasury market unless U.S. policymakers engage in some form of yield curve control to cap yields. On top of all the above, AI appears to be accelerating U.S. service and white-collar job losses after the U.S. spent the past 25 years sending manufacturing jobs to China in favor of cleaner and higher-paying service jobs, suggesting a structural employment problem in the U.S. economy that may require some form of universal basic income sooner than we expected. And now, by China launching a de facto embargo on rare earths, China just effectively declared that U.S. dollars are no longer good for Chinese rare earths, and perhaps not for any tech product that Chinese rare earths goes into, i.e., Chinese rare earths and related goods just went no offer in dollar terms. Your dollars are no good here. Gold and Bitcoin are not rising solely on a debasement trade. They are rising on a growing recognition of the complete failure and loss of the U.S. economic policy and strategy of the last 40 years, and the further growing recognition that the U.S. reversing this failure will require some form of yield curve control and UBI, leading to a much lower dollar versus gold and Bitcoin and much higher secular inflation. This is so much bigger than just a trade. It is the dawning recognition of a systemic issue, which will require a phase shift higher in the price of gold to recapitalize, which is why we think gold and Bitcoin have so much further to run in the coming months, quarters, and years. But as we have begun to see this week, on very high volatility. Unbelievable. Huge fan of Luke. Absolute mic drop. I couldn't agree more. Okay, and that brings me to the last chapter here, which was AI. So I really wanted to touch on AI. This is a little bit of a briefer chapter, but I wanted to touch on AI because I've been seeing a lot of AI's deflationary. It's here to save us. The math doesn't say so. Let's talk about it. First of all, AI continues to kill it so much that it's leaving people unemployed. Okay, Accenture lays off 11,000 people as part of an AI reskilling strategy. Okay, JP Morgan's Jamie Dimon says AI cost savings now match money spent. Jamie Dimon said JP Morgan Chase spends $2 billion a year on developing artificial intelligence technology and saves about the same amount annually from that investment. We know that it's got to billions of cost savings, and I think it's the tip of the iceberg, the bank's chief executive officer said on Tuesday. Okay, so if Chase is getting their money back from what they're investing, you think they're going to invest more? Probably. The Wall Street Journal, debt is fueling the next wave of AI boom. Now, This is a really big inflection point for AI because so far AI's been financed off balance sheet. So companies like Facebook, Google, these big Amazon, these tech giants are financing it off their balance sheet with cash flow. Now AI is getting into debt. Okay? This is where shit gets crazy, is when it's being financed with debt, not with real cash flows, okay? So for aspiring AI players like Oracle, much rides on debt and hope. So we have now entered a new chapter of AI boom financed by debt. This shit is going to get absolutely crazy. And something I want to point out to you guys, without data centers, the GDP growth of the United States was 10 basis points, 0.1% in the first half of 2025. U.S. GDP growth in the first half of 2025 was almost certainly driven by investment in data centers and information processing technology, according to Harvard economist Jason Furman. Excluding these technology-related categories, Furman calculated in a September 27th post on Twitter, GDP growth would have been around 0.1% on an annualized basis, a near standstill that underlines the increasing pivotal role of high-tech infrastructure in shaping macroeconomic outcomes. So I'm giving you this context. The U.S. has to have AI work. If AI doesn't work, the U.S. economy is shown to be an absolute scam, no productivity, no growth whatsoever. And we know that Trump and Debasement, they're like, we're going to grow our way out. We're going to grow our way out. We're going to grow our way out. But when you double click, pull on that thread, guys. Be curious. Pull on that thread. Where's the growth? Where's it going to come from? It's all AI. And then I click at the Wall Street Journal. Boom. AI is now being financed by debt. Here we go. We haven't even gotten started yet. And so what does that mean? So I saw this tweet. This is the head of product at Twitter. Gold and Bitcoin are acting like we're about to enter a period of hyperinflation, but no one realizes that AI is deflationary. This is where I think people haven't thought deeply enough about this. So AI is already disrupting tens of thousands of jobs, hundreds of thousands of jobs, disrupting the white collar worker, you guys. We'll get into it in a second. China disrupted Red America. AI, Bitcoin, the internet disrupted Blue America. Red America is the manufacturing jobs, the people in the middle of America that didn't care to get a high school degree, didn't want to go to university, didn't want to be a financier, didn't want to be an accountant, didn't want to be a lawyer, wanted to work with their hands. All their jobs are in China. The internet, Bitcoin, and AI is now disrupting white collar workers, Blue America. All the people that went to Harvard, got a degree, worked on Wall Street, Bitcoiners are outperforming them. Oh yeah, sick, bro. You run a hedge fund? Get fucked. 60% CAGR in your face. And all we do is stay humble and stack sats. Oh, you're a lawyer? You got 17,000 law degrees? I don't need you anymore. I have AI. And so the problem is, yes, AI is deflationary technically. But when all these people don't have a job, but they have a mortgage, they owe car payments, they have to pay down their credit card, then what? Pull on the thread, guys. Pull on the thread. AI further exacerbates the wealth gap, okay? All the wealth that AI creates is going to Elon, is going to Mark Zuckerberg, is going to Sam Altman. This is where this idea that you keep hearing of UBI is, okay, fine, it's deflationary, but no one has a job and everyone has debt. The United States thought it'd be a good idea to build a country on a debt-based economy. So when everyone's getting fired and robots take their job, but they have a mortgage, they have a car payment, they have credit cards, then what? They're going to have to print the money. And this gets into just kind of like an interesting philosophical dilemma. Like what? Is Mark Zuckerberg's money everyone else's money? Does Mark Zuckerberg have to revenue share with the global populace, the people that he's disrupting and placing jobless? Is it his moral obligation to give some of his money he's making to everybody else? Or is the government's job to print the money and make sure that everybody can live and make whole on the lifestyle that they were encouraged to embark on? But AI growth is about to take off, even more so. It continues to grow faster than we thought. It's now into debt-based financing, not just cash flow-based financing. People can borrow from their future to do this shit. They don't have to use the resources they have now. That is insane. We have not seen anything yet. And so, yes, it's deflationary. But if you guys think AI is going to swoop in and save the day and grow our way out, you have seen nothing yet. All these white-collar workers, they're in college debt. They have a mortgage. They don't own their full car yet. They have credit cards. Print the money. This tweet was kind of funny. So Mr. Beast, the most popular YouTube guy, when AI videos are just as good as normal videos, I wonder what that will do to YouTube and how it will impact the millions of creators currently making content for a living. Scary times. Now, Sailor, I don't know if he had thought about this as much as I have or not. Probably, because he's always just tweeting, AI meme shit like this, but buy Bitcoin. And that's the truth. If you want to hedge against this future, buy Bitcoin. It's a simple answer, but it's the answer. Okay, now I want to play you guys this clip. This is really important. I mean, Balaji, I'm a huge fan of, Balaji Srinivasan. And there's 2 clips from him in this podcast with Peter McCormick. If you guys haven't seen this episode, I'd highly encourage it. It's really, really interesting. It's titled The Collapse of the West, Why AI, Bitcoin, and China Will Win. Now, as an American, I don't know if I fully agree with that. But nonetheless, I think America is going to really find itself eventually here. But nonetheless, let's take a listen. Balaji's talking about what I referenced earlier, how China has disrupted middle America, red America, the factory workers, the people that want to do physical labor jobs, that don't want to get jobs because of their degree. They want to use their hands and build things. Those jobs are in China. And the left, the people that are hyper-financializing things, or the people that are building technology, or the people that are lawyers, that are in the college debt, that got 77,000 degrees, they're being disrupted by the internet, by Bitcoin, by AI. Let's listen.
China went and disrupted, even the colors are reversed, China disrupted red America, and the internet disrupted blue America. And both of those happened right around the same time in 2010. Okay. That means that we actually have not a 2-party conflict between red and blue, but a 4-party conflict between China, red, blue, and the internet. Okay. And it was the loss of economic status that led blue America to go woke and then push the tech lash. Wokeness, because when blue America's resources were getting constrained, they had a backlash against the internet, which was all the anti-tech stuff of the mid-2010s. And they had a backlash against red, which was wokeness, because they felt, okay, we're under assault. We need to expand our territory again, right? And then with red America, because they felt that...
Hold on, is that... So we lost some journalist integrity to protect revenue streams?
Of course. In fact, actually, one way of looking at that is if you look at the NYT... So this is a graph that actually shows New York Times word usage frequency 1970-20.
Yeah, I've seen this, yeah.
And then exactly starting in 2013, they made an editorial decision to start saying toxic masculinity, male privilege, white this and that, right? This is not an organic thing. That just went vertical in that year. They made an editorial decision to start writing that narrative, right? Why did they do that? Because woke words get traffic. Right? And if you go and see the NYT stock price, right? Basically, it was in the doldrums after the financial crisis. And then once they started figuring out that wokeness boosted their traffic, it started going up like this, right?
It's kind of sick.
Yes, it is. They basically destroyed essentially trillions of dollars in the social fabric to make a few billion in ad revenue, right? So that's like one piece of it, right? And the other piece of it is that with China being threatened by the trade war over here, or rather with the U.S., with red America being threatened by the trade war, red America also felt under threat because post-financial crisis and then this threat. So, and then they were being attacked by wokeness, so they elected Trump. And they also did the trade war with China, right? So you can see, why does it keep doing that? It's like, I don't know, what's it? So you can see essentially that Blue America was in conflict with Internet and Red America, and Red America was in conflict with Blue America and China. You could actually make a graphic of that, right? Red America versus China is a trade war. Red America versus Blue America is Trump. Blue America versus Red America is wokeness. Blue America versus the Internet is the techlash. With me so far?
Yeah,
okay.
yeah.
And the reason is that the Internet is going after Blue America's strongholds of media and money, and China is going after Red America's strongholds of the manufacturing and military. And this is only set to go further in the next 10 years because the Internet is doing AI and crypto. So you're going to take over all media and all money. And China is doing robots and drones. So you're going to take over all manufacturing and all military.
Wow. The internet is going to take over Blue America because it's doing Bitcoin and AI. China has disrupted Red America because they're doing all manufacturing and military. That's it, guys. And so when people say, Jack, you're such an asshole, you support Trump. What? No, I don't. Jack, you're such an asshole, you don't support Trump. What? No, I don't. I'm an internet baby. I vote orange. I'm a Bitcoiner. And this is what's happening, guys. And so what does this have to do with AI? AI is disrupting the white-collar worker. We saw what happened when China disrupted the blue-collar worker. The U.S. had to print the money. All these people that had no jobs, no income, and were riddled with debt, we had to bail them out. So if you think AI is deflationary, sure, okay. But make no mistake, we have to print the money. We have to print a lot of money, okay? There's one more really, really good insight by Balaji here that I want you guys to listen to, and then we'll move on.
The trade war, these tariffs are not going to work because they're not actually reducing the barrier to domestic American production, which would have meant cutting regulations. That's what it would have meant. That would have cost nothing. That would not have, no allies would have gotten mad about that. Instead, rather than working on oneself, they thought that America was strong and it was the number one market and everybody else needed them and that other people would pay for it or some silly kind of thing, which was, for whatever reason, they decided to go with tariffs rather than regulations. They did not focus on building up their own capacity, okay? There's like some anti-regulatory stuff, but it's not as much the focus as this insane trade war has been, okay? And so that is Red America's futile campaign versus China, which is just cranking out the robots, cranking out the drones, okay? On their side, which has not been as much covered, is the journalists are getting increasingly frantic about AI and actually also Bitcoin and crypto, okay? The AI part is very front of mind for them, where they are, obviously, Gensler tried to stop the Bitcoin ETFs and all that kind of stuff. There was that whole backlash, when we defeated him. But, meaning global crypto movement defeated him. But with AI, less well known perhaps to many people, is that many media companies have unions now within the companies that are trying to stop them or have stopped them from using AI in their production. Do you know this?
Yeah. And I've seen it also with Hollywood.
Yeah, that's right. So they feel very threatened by AI and they feel threatened by crypto because AI takes away their control over media and money. That's what Blue America feels threatened by. Just like Red America is threatened by China taking away their control over manufacturing and the military. But their reaction to this is not to work on themselves. It's not like Red America, unfortunately, is reducing the barrier to building robots. They're doing some of that. It's not zero. But they're not really taking into account the concept that they need to be competitive in a neutral third market like Uruguay or Saudi Arabia, where both the Chinese and American product are on the shelf. The American product has to win on cost and quality, right? They're not thinking about that as they're just playing defense on what they already have. They're not thinking, okay, how do we play to win, right? This is a weird turnaround because for decades, every American that I worked with, we were thinking, okay, how do we expand into Turkey? How do we expand into Brazil? How do we expand into Japan? It was obvious that the products we were making in America were globally competitive. Suddenly, a lot of Americans have flipped from thinking of the world as their market to the world as their competition.
Man, guys, this is it. It's what we've been talking about on this show over and over and over again. You know, why the journalists' attack on Bitcoin and AI? Why was their government, why was Gensler attacking Bitcoin? They're threatened. AI, the internet, Bitcoin disrupts, the left, the white collar worker, the lawyer, the journalist, Hollywood. That's where the hostility comes from, obviously. In the same way that Red America's jobs and lifestyles in China. This is what we're living through. And so what we have to do as a country, as America, as the founding fathers wrote, is lean into the principles that founded this nation. Freedom, democracy, technology, innovation. Lean into things like Bitcoin. Lean into things like the internet. Democratize, decentralize. But this is what's happening. So listen, do you want to be long the Wall Street Journal? Or do you want to be long Bitcoin? You want to learn how to use AI and protect yourself of a future where AI disrupts a lot of the white collar? Or do you want to ignore Bitcoin, ignore AI, long Wall Street Journal, long dollars? And if you think AI is so high growth and so deflationary that it's going to save us, you haven't pulled on the thread. You haven't thought through. Save who? So you're going to have hundreds of thousands, if not millions of people with college debt, mortgage, car payments, credit card, and no job. Okay. We'll see how that goes. We will see how that goes. All right. The last chapter here, stay humble and stack sats. So bringing it all back, I saw this tweet, devastating. Someone lost $15 million. $15 million to $4,000. People are 100% going to be jumping off buildings. This person lost $15 million on some shitcoin called Sui. I don't even know what that is. But the point is, stay humble and stack sats, guys. Sometimes the hardest thing to do is the easiest thing to do. It's hard to ignore temptation and to stick to what's right. But I'm telling you guys, I've lived through it all. This is the way. If you held the McChicken for the past 5 years, you would have outperformed the S&P 500. Now, this is obviously a joke, but the McChicken used to be worth $1 when I was in high school. Now the McChicken is worth $5.50. And the point that I've made on this podcast is everything performs in dollar terms. Shitcoins perform in dollar terms. Stocks perform in dollar terms. McChickens perform in dollar terms. Water performs in dollar terms. It's not these things performing well. It's the dollar going down. Do not get fooled by shitcoins and bullshit stocks pointing, well, look, we're up over this. Everything's up. If you really want to play that game, I shouldn't have bought stocks. I should have bought McChickens. The point is, what is something you can rely on that is built to last, that is built to be money, that is built to be savings? Bitcoin is the answer, guys. Stay humble and stack sats. Citibank came out. They plan to launch Bitcoin and crypto custody services in 2026. Forbes reported that President Trump owns almost $1 billion worth of Bitcoin. I don't know if that's true or not, but the point is, let's listen to Daddy Fink here.
The markets teach. I did say Bitcoin, because we were talking about Bitcoin then, was the domain of money launderers and thieves. But the markets teach you have to always relook at your assumptions. There is a role for crypto in the same way there's a role for gold. That is, it's an alternative. For those looking to diversify, this is not a bad asset, but I don't believe that it should be a large component of your portfolio.
See, that's where Larry Fink and I disagree, and that's why I've outperformed him, because Bitcoin is over 100% of my portfolio, and it's not a large part of Larry Fink. So he's getting there. He'll get there. He'll become a listener of the show eventually. But the point is pretty simple, guys. Everyone's waking up to it. It's chaos. It's madness. You're going to be tempted by everything. Everything's going up in dollar terms. Everyone's going to want you to buy their stock. Everyone's going to want you to buy their shitcoin. My message to you, stay humble and stack sats. People say, man, there's all these stocks. What account should I sign up for? How much leverage should I? No. Shh. You stay humble, you stack sats. That's it. Then you spend the rest of your life falling in love, working hard, being healthy, seeing the sunrise, seeing the sunset, watching the Chicago Bears on Monday Night Football after this. Bitcoin saves you time and energy. Stay humble, stack the sats, okay? That's it. That's the plan. That's the winning strategy. All right. Now on to my two companies real quick. 21. Listen, guys, I can't get approved by the SEC when the SEC is shut down. The government is still shut down, and we need the government to approve us in order for us to be listed on the stock exchange. So everyone's tweeting at me, when is the deal going to go through? The government has to come back. So, I mean, there's nothing we can do. We continue to own our pile of Bitcoin. You know, one of the things that makes us different than a lot of these other companies is we've already purchased the Bitcoin held in escrow. So, you know, with the current dips, and I don't know what Bitcoin's at, call it we hold around $5 billion of Bitcoin in escrow, which is a tremendous amount, the third largest corporate holdings in the world. And as I've said, we are very excited for the operating businesses that we plan to launch and that I want to tell you guys about with a focus on cash flow and Bitcoin as soon as I'm allowed to. But for everyone, like, when XXI? As soon as the SEC is back. But with the government being closed, there's only so much I could do. I mean, I'm laughing because if not, I'd cry. And Strike. All right. Let's go. Great topic. So obviously, being the founder and the CEO of a global Bitcoin brokerage during Bitcoin's like most intense collapse and margin calls and everyone freaking out, and you know, we had launched our lending product, so we have tons of customers that have borrowed money from us with Bitcoin as collateral. So first, I want to just report this. People were like, oh, how many times did Strike margin call someone? How many liquidations did Strike do? 0. No liquidations, not even a margin call. And there's a few reasons for that. One, our platform is legit. We are not a shitcoin casino. We are not a tiny little startup that's just getting started. We are one of the biggest Bitcoin companies in the world. We might be the most profitable per employee Bitcoin company in the world. Like, focused on Bitcoin, selling Bitcoin financial services. None of these shitcoin things, none of these other, like, we just sell Bitcoiners, Bitcoin financial services, extremely profitable. We operate at a massive scale. We are built to last. And so people can rely on Strike and know that our focus, our engineering, our product, we're in the right place. Everything operates tremendously well. So that's one. Two, a 10 to 20% dip is not enough to trigger a liquidation on a 50% LTV Bitcoin-backed loan, okay? The market's got to move much more than that. And so we don't offer our customers 100x leverage, 50x leverage. You know, you can take out, if you have $100,000 of Bitcoin, you can take out $50,000 in cash on a loan with us, okay? So this is not severely over-leveraged customers. Our customers are using this to either acquire more Bitcoin or to do things in their life, like buy a house, pay off an old debt, pay off their student loans, right? And then the third is that, this is a fun fact to share publicly, Strike customers seem to over-collateralize. So the average LTV when opening a loan is actually closer to 40%, even though we allow 50%. So people over-collateralize. And we had no liquidations, not even a margin call, okay? So next is this tweet I had. So we were online the entire dip. Coinbase went down. Robinhood went down. Kraken went down. We were online. We were functioning. We executed orders. We did see for a little blip a very volatile spread. Spread meaning the difference between the bid and the ask. So, maybe you could buy Bitcoin at 113,000 and you can sell Bitcoin at 109,000. That's a big spread between the two. Usually you'd think Bitcoin is as close to one price as it can be. If Bitcoin's worth 111,000, why isn't the buy and sell 111? Why is the buy 113? It feels like I'm paying too much. And the sell like 109, it feels like I'm not getting enough. Okay. So I wrote to this, I said, totally fair. The short version is that when the market gets extremely volatile, liquidity across all venues dries up and spreads widen across the industry. For example, at one point, we saw 2 major liquidity providers go down, and so did Coinbase, Robinhood, and Kraken. That said, we're reviewing all trades from that window and crediting users out of good faith. Appreciate you flagging this. Our goal is to be transparent. DM me your username. Okay, so let me tell you guys what happens when the industry goes through panic and what happened with Strike. So, first of all, the way Strike works, we're not an exchange, okay? Meaning, we're not pairing up buy and sell orders together, okay? When you purchase on Strike, we are connecting with what I call in this tweet LPs, liquidity providers. And there's a ton of them all over the world. There's a ton of them that we're integrated with. They give us quotes back. So if you go into the Strike app and you say, I want $100 worth of Bitcoin, we basically ask a ton of people all over the world for $100 worth of Bitcoin. And we try and give you guys the cheapest price we get back, okay? So we turn around. So John Doe, and obviously this is all through the app. Hold on. Let me turn my lights on. The sun's gone down on me, and I'm now in the dark. It looks too spooky. That's the end of this Chicago summer. Sun goes down at 6 o'clock. What the hell? All right. So when a customer asks, hey, Jack, I want to buy $100, and I'm making this up just for storytelling, but you guys ask me through the app, right? So you type in $100, you request to buy. What we're doing is I'm turning around here, turn my chair into the closet, and we look at the world and we say, we need $100 worth of Bitcoin. Who's got the cheapest price? And people compete basically on cheap price to win the volume from us. And so we say, okay, this liquidity provider is selling Bitcoin at $111,051. This one's $111,049. This one's $112,000. Ooh, we're not going to do business with them. And we're constantly working on sourcing cheap Bitcoin. And we sell a ton of Bitcoin to customers. Customers sell Bitcoin to us. And we're constantly working on liquidity. And that's what goes on behind the scenes. So when I say a liquidity provider, Strike is not selling Bitcoin to you off our balance sheet necessarily, right? Like, I don't want you guys buying up my entire Bitcoin treasury necessarily, right? And we're not an exchange where when you buy, you're not pairing up with a seller. In fact, Strike customers are traditionally buy side. We have way more buyers than sellers at all times. And so I'm constantly needing to source Bitcoin for you guys to buy. And it's a 24/7 majority automated function, and we do it globally. So we do it in the dollar, we do it in the euro, we do it in the British pound, we do it in Australian dollars now, and we do it in USDT globally. Okay. So that's how the product works. When the market crashes $20,000 in 12 hours, the spreads got really wide. Because what happens is when someone asks for $100 worth of Bitcoin, and I turn around and say, hey, I need $100 worth of Bitcoin. Who's got the cheapest price? All of a sudden, they weren't 111,051, 111,049, 111,053. 2 people went offline entirely, like 2 massive firms. I'm not going to say their name, obviously. It's not my business and they don't deserve that. But 2 massive liquidity providers in the industry that you'd be able to Google or recognize their name just went offline entirely. We were like, oh boy, carnage out there. Either they got blown out or they had issues or they weren't comfortable with the risk and they went offline. And then the other liquidity providers widened their spreads because of the volatility and the risk. So they're giving back to me, hey, Jack, we'll allow customers to sell at 109,000 and buy at 113. I immediately, we at Strike, we got on a huddle because our software is working. Everything's fine. The servers are ready. And this goes to our ability to just focus on Bitcoin and be the best at that. You know, some of these other companies that have gone down, like a Coinbase, I can't imagine all the volatility in a million different tokens. That's unsustainable. It's not going to happen. We're a Bitcoin-only firm. Our focus is just on Bitcoin. We want to be the best in the world at giving you guys Bitcoin financial services. That's it. You want to do Ethereum, Solana, Dogecoin, Sui? Not me. Not for me. You want to be able to buy Bitcoin. You want to be able to get a loan. You want a line of credit. You want to be able to custody it. You want a wallet. You want to be able to pick up the phone, call support. You want to be able to listen to the CEO, do live Q&A every Monday. That's who we are. Okay? So we're online. We're functioning. I get the team in a huddle. And I say, okay, what can we do about this? Because everywhere I'm looking, I'm picking up the phone, I'm pinging friends, I'm pinging other liquidity providers. Nobody has tight spreads that are consistent. The crazy thing too is some customers experienced wider spreads for this, whatever it was, 30 minutes of time. A lot of customers didn't. We're a pretty big company. And so we executed, this was a record day for us as a business. We were one of the only firms online, and we sold a fuck ton of Bitcoin. So it wasn't for everybody, but I was looking, it's like, these spreads are sporadic. They're not consistent. What can we do? And I didn't have too many options. I couldn't find anyone reliable with deep liquidity, like that could handle our flow. Not like, oh, I found someone that's willing to give me tight spreads for $100. No, I need tens of millions of dollars in this 30-minute window here. Like, who can help me out? And everyone was blown out and offline. So that's the high level. I mean, when markets get volatile and they crash like that, liquidity dries up. And when liquidity dries up, these LPs widen their spreads. And that's across the whole industry. Okay, it's kind of how it works. Now, there's some things that Strike could do better 100%. One of the things that we ended up doing is we put a little pop-up inside the app and said, due to volatility and lack of liquidity, spreads may be wide. We put that in there. We're going to look to automate that. There were liquidity providers that have introduced themselves to me that claim to have liquidity that want to plug into our systems. We're going to add a bunch more liquidity to make sure that we have even more options now. We were the only firm, one of the only firms at our size and scale that stayed online. So we're going to win a lot of new business from people that can source us some liquidity. So that's another thing we can do. But yeah, I mean, when shit hits the fan, the other thing we did is we credited users like I have on the screen here. I had to make a decision. Like, did we fuck up? I mean, I'm never a guy of excuses, so I'm not going to say no. But I was only passing back the price that I was getting. I wasn't fucking anybody. It wasn't a bug in our code or anything like that. But the right thing to do, I felt, is to make Bitcoiners whole in a way that we felt was reasonable to us. And so we went through, I had the customer support team and the data team look at everyone that could have been impacted. And I went through all my Twitter DMs over the weekend, and we gave users credits for people that were affected because, it's not their fault. And we don't want them to have a bad experience with us or a bad experience with Bitcoin. It was a rare market event. So anyways, that's what's like behind the scenes. It's fun, All of a sudden, you look at your phone, you're, oh shit, Trump's tweeting about tariffs. You look at the Bitcoin price, whoop, there it goes. Everyone get on a huddle. Let's do the best we can for Bitcoiners. It's wartime. And so, anyways, that's what happened. I'm happy to answer any questions. I don't know how in depth to go in these versus high level, because I want everyone to be able to understand it. But if you guys have detailed questions about that and what it's like behind the scenes or any of that stuff, just ask and we'll tackle it in Q&A. But that's what happened. Bunch of people went down and offline. Liquidity dried up across the space. And especially when Coinbase, Kraken, Robinhood goes down, that's where a lot of these liquidity providers are sourcing their own Bitcoin. So liquidity dries up, spreads widen. I was only passing back what I was getting to you guys. I apologize for it. Try and make you whole on it. But anyways, that's what happened. Ask me whatever you want. And And it wasn't that long. It was like a half hour, but it was a shitty experience for those that experienced it. If you haven't been made whole on it, send me a DM on Twitter. I'm happy to take a look. And we're just trying to be the people's Bitcoin company, the people's champ. So glad we were online. Glad we were to serve a lot of you. A lot of people had these target orders that executed. I think someone executed a target order at just above 100,000. So, anyway, ask away. And then the last thing on strike, tomorrow I'll make an announcement about the expansion of our lending product. Because of the rules in Europe, it won't be called European lending, but we are announcing that we have expanded our lending product. We now offer loans in US dollars, euros, euros, the Australian dollar, and USDT. And so that'll go out tomorrow morning, my time. So around, early afternoon in Europe. All right. Oh, I'm like dry mouthed from, that was a long one. That was 90 minutes of presenting and we haven't even done Q&A. Let me pull up Q&A. I'll try and keep it short. I told you guys this would be, I said I'll try and keep it short and Dylan's like, so many questions. I'll try and keep it short. I told you guys, though, it would be a long episode. Hopefully a good one, though. I've had fun so far. All right. Let's go. Macro questions. Oh, no. I got to blow up my face. You guys don't like when my video is blurry when I post the recaps on Twitter. There we go. How am I looking? Keep it together, ladies. Keep it together. All right. Here's a question. People are saying the markets were manipulated. Do you think that they were? What about the shitcoin markets? Does that manipulation really even matter? No, not to me, not to Strike. Like I said, dealing with shitcoins is a whole other ballgame, right? Like if I'm Coinbase, I'm Robinhood, I'm going down when the market's in chaos like that. That's just how you're supposed to support thousands of tokens that are going down 20%, liquidity's drying up. It's virtually impossible. Thousands of different blockchains. Can you imagine withdrawals like on different chains and nodes on different, whatever? That's impossible. So shitcoins doesn't matter to us. Shitcoins doesn't matter to me. Do I think the market was manipulated? No, I don't. I think that Trump threatened to go to a severe trade war with China that would throw us into a massive recession and crash all financial markets everywhere. And then, as we know him to do, 24 hours later, he walked it back. But that's what happened. And if Bitcoin didn't go down like it did, I would have been sad because I know Bitcoin to be the global liquidity vehicle. It's the truth machine. When shit goes down, whether good or bad, you can rely on Bitcoin. It works. And so Bitcoin worked. Trump bluffed a massive trade war and Bitcoin did what it did best. Told the truth. Said, bad. Real bad. So, no, I don't think it was manipulated. Jack, you mentioned before a possible $500,000 Bitcoin price this cycle. What are the 3 reasons you believe this to be possible in the current economic climate and what time frame? They got to print the money is number 1. Number 2, they got to print the money. Number 3, they got to print the money. It's because the dollar has to go down. They have to print so much money. It's what we talked about on this show in many different angles, whether it's through AI, whether it's through reindustrialization, whether it's through financing our own treasury market. They have to print the money. And Bitcoin is the best performer when there's more fiat sloshing around in the system because it's the scarcest thing. It absorbs fiat liquidity the best because it can't expand. You can't make the 22nd million Bitcoin. And so for that very simple reason, I think Bitcoin's going to perform. Now, my 500,000, I'm on record of 250,000 to 1 million. I know that's a wide range, but I don't know. Whatever. That was my prediction a few years ago. I would say at some point in 2026, I think we reach there. And then if the market slows down a bit, maybe corrects, we'll have to see. but I'm not a believer in like the 4-year. I think Bitcoin reacts to global liquidity. And we haven't seen anything yet when it comes to global liquidity. I think Trump has midterms coming up. Politicians are going to politic. And I expect a lot of money to be printed because at the end of the day, I mean, we're witnessing it. Like, if China doesn't want us to do something, we don't do it. That's not going to last here in the United States. We're going to reindustrialize. We got to get to work. AI, data centers, factories. We got to build shit. And that costs money. So that's why. I think the dollar's got to go down. I think Bitcoin and gold got to go way up. Jack, if fiscal... Oh, here's my tagline. Bitcoin equals technology plus fiat liquidity. That's my equation. So if you continue to believe that technology is going to disrupt stuff and there's going to be more fiat liquidity in the future, own Bitcoin. That's my thesis. So like, Jack, why do you think Bitcoin's going to go up? I believe in technology. I believe there'll be more fiat in the future. Jack, if fiscal dominance drives the Fed to zero, how quickly could that play out? And given today's macro environment, roughly where do you see mortgage rates landing? I think mortgage rates have to come down because it's like national policy. I just don't think America can survive much longer with housing being so unaffordable. People my age, my generation, like literally can't afford to own a home. And again, here's the thing about this, guys. People are going to vote for, like, how do I say? If there's a politician that says, we're going to go through austerity, we're going to go through an extreme depression, life's going to suck for 10 years, but we have to realize the losses that were created before us, and then we're to the moon. We're going to be a hard money society. We're going to be a principled society. We're going to be a prosperous society. And then there's a politician to their side that says, I'm going to lower mortgage rates. I'm going to give you a bunch of free shit. Who's going to win the election? You know? And so at the end of the day, I think the government is going to continue to print the money and optimize to try and give people free shit at the cost of things like inflation and currency debasement. Because at the end of the day, that's what they're there to do. And at the end of the day, that's what people are voting for. So until you think we're going to elect someone to do the hard thing, you have to just protect yourself. And I expect the easy thing, like that's just the way it's always been and will continue to go. So I expect mortgage rates to come down to what range? I have no idea. I paid for my house in cash, which was dumb in hindsight, but I don't know. That's not my expertise. And how quickly could it play out? I think the whole, fiscal dominance, I think it's playing out in front of our eyes. We'll see how Trump elects his new Fed chair when Powell goes bye-bye. But what he's doing right now, engineering majority of the Fed board and bullying the Fed, and Debasement giving Argentina the swap line out of the Treasury as opposed to the Fed. I mean, that's crazy levels of fiscal dominance. Swap line is a Fed tool, not a Treasury tool. So we're living through it all. I think it's happening right now. When do you think Bitcoin will get single-digit pristine collateral rates from everyday banks? Long time. I think companies like Strike, obviously 21, super interested in providing financial services. We've disclosed that publicly. I think companies like ours are going to lead the way where others will follow. Like we're seeing Citibank say they hope to have custody in 2026. JP Morgan said we're going to have trading but not custody anytime soon. And so I think it's going to be a long time, probably. You might see some margin loan products on like IBIT, like an ETF. But against physical Bitcoin, I think it'll be a really long time. But that's why I'm a founder. That's why I'm not retired, is because there's opportunity to solve problems and do the hard stuff that other people probably aren't willing to do. When do you think Bitcoin will get single digit? Oh no, I just did that. What will happen to Bitcoin when/after the stock market crashes from the AI bubble? I don't think the stock market can crash because I think that the U.S. government needs the stock market to go up in order to afford itself. Like it needs the tax receipts. Like the U.S. stock market is the United States savings account. If the stock market crashes, we enter a recession. And so I think they're going to prop it up. They're going to print the money. I don't disagree that the AI bubble can pop, but they're going to have to print the money. What happens to Bitcoin? It's TikTok next block. I mean, in times of chaos, the best assets sell first. There's liquidity, there's buyers. Bitcoin's a 24/7 market. So I wouldn't, it's not going to be immune, but neither is gold. Nothing's going to be immune to if the US stock market crashes and we go into a recession. But then Bitcoin will find its feet and outperform like it always does. I don't know. But I actually don't think the US, we're at a point now where we can't have a stock market crash, at least a sustained one that like lasts more than a week or a month. Like it has to go up according to the math. Okay, Bitcoin questions. How do the various current Bitcoin market makers and liquidity providers compare to the legacy traditional market makers, and how do their exposure to shitcoins impact their liquidity depth? Again, I can't speak to the shitcoin stuff because I don't do any shitcoins. I don't own shitcoins. I don't build shitcoins. I don't offer shitcoins. So shitcoins have nothing to do with me. How do they compare to legacy market makers? It's a pretty simple service, right? Like they stream quotes to people to make it feel like buying Bitcoin at the price is instantaneous. The reality is there's no price of Bitcoin. What's the price of my shirt? Trick question. My shirt is worth whatever someone else is willing to pay for it. So if you want to buy Bitcoin, what's the price? The price is whatever you're willing to pay for it and whatever someone's willing to sell it to you for. So the reality is if there was no liquidity providers or no one like Strike, you'd have to like go out into town square, as an analogy, say, I want to buy Bitcoin. Someone say, I have Bitcoin, I'll sell some. And you say, I offer this. And they say, no. You say, well, I offer that. And they say, no. But this is all automated. And so like a lot of the service that someone like a liquidity provider is providing is to make it easy and instant. And they're sourcing, obviously, lots of data and pricing from everywhere else. And that's what they do in traditional markets. That's what they do in Bitcoin. It's a valuable service. They make a little bit every single time, but they do, if they can scale it and do it very frequently and do it for a lot of companies like Cash App and Strike and whatever, other businesses, then they can make a good living. So I don't know how to answer that question. It's pretty similar. I have nothing to do with shitcoins. And when the market goes down like that, some liquidity providers just pull themselves from the market. It's just too much risk. Like when there's sellers, and there's no buyers, you don't want to get caught offside. And so that's what happened. I mean, the liquidity providers that we work with came back online when the market calmed down. They couldn't take the volatility that day. Yo, Jack, not worried about the recent volatility, but I can't help but be curious. Are the recent sellers smaller retailers, institutions, or old whales? Who gets spooked when the market goes down? I think it's a lot of leverage. So what happens when there's leverage and cascading leverage is when someone gets a margin call, they have to sell the Bitcoin to meet margin, right? So if a lot of people are borrowing money with Bitcoin as collateral and their collateral goes down in price because Bitcoin goes down, then they are puking Bitcoin. So they have to sell the Bitcoin to meet their margin call. And them force selling the Bitcoin causes Bitcoin to go down again, which repeats the process. So if someone gets margin called with Bitcoin at 119,000 and they all have to puke out their Bitcoin, which forces Bitcoin to 118, but then it triggers another margin call from people at 118. And so you have this like systemic puke of everyone that's on leverage borrowing money. It cascades itself down. So it's a lot of that. There's definitely traders that treat Bitcoin like the NASDAQ, like risk on. And so when Trump tweets something like that, it's risk off, pull Bitcoin. And it's also the other thing, it's the only way to express this on a Friday night. So Trump very strategically posted all that he posted when markets closed. Okay, so he's not dumb enough to do it when the stock market's open, because the stock market would have vomited way harder than it did. And so the other thing that, Bitcoin, unfortunately, it's the only game in town. And so if you are a trader or a speculator and you want to express the fact that Trump just did this, you do it through Bitcoin. Borrow some money, sell Bitcoin. Take the Bitcoin in your portfolio, sell it. And so speculators, traders, and then a bunch of leverage just causes this cascade. But it's an opportunity for the rest of us that are staying humble and stacking sats. Thoughts on Binance manipulating the price of Bitcoin? Again, I think Bitcoin did exactly what it's designed to do. Be the only global free market that can be truthful. It was open. It was available. I don't think there was, price manipulation going on. And Bitcoin reacted just as I thought it would when Trump and JD Vance started to revert their stance. I think Bitcoin can make a new all-time high in the next few weeks. Like, it could rebound that quick. It all depends on if the U.S. is going to bluff, like Trump's going to drive everyone into austerity and a trade war, or if they're like, you know what, we'll print the money. We'll see what they do. You guys know my bet. Jeff Booth says Bitcoin wins as long as it stays decentralized and secure. What does he mean by that? And do you agree? Also, what's the biggest threat to that security? And could it ever succeed? So what does Jeff mean by as long as Bitcoin stays decentralized and secure? Meaning that's the core principles. No one can change it. So the fact that Donald Trump or Putin or China, nobody can say, you know what? We need 22 million Bitcoin, not 21 million. No one can say we need 1 minute block times, not 10-minute block times. The world can be changed by Bitcoin because the world can't change Bitcoin. It's this immovable object. It is a bedrock that we can build a prosperous society on. We can rely on the fact that no one else can rug us, can change it. And so in order for it to have that property, it has to remain distributed, sufficiently decentralized. If it gets into a state where it is centralized, well, then someone can change it. Like, we've seen Ethereum change a dozen times. There's an Ethereum Foundation that makes decisions, has made decisions in the past on behalf of Ethereum, more or less, basically. So that's what I assume he meant. I agree with that. Bitcoin has to remain distributed, decentralized, and that infers and implies its security. Without that, if Bitcoin was only as good as Trump can tweet, I'm raising Bitcoin's supply cap from 21 million to 100 million, and Bitcoin would go down a lot. Actually, it might just trade to zero. So what's a threat to that? Everyone should run a node, store your own Bitcoin. If we all held our Bitcoin on Coinbase, that'd be a threat. If none of us ran nodes and we just relied on Coinbase, that'd be a threat. Because then Bitcoin is whatever Coinbase deems Bitcoin to be. So the fact it's sufficiently distributed because all of us can run a node on our computer, run a node on a Raspberry Pi. So as long as we keep the software accessible, we keep it easy to run, we have a community of people like us here on this live stream that are advocating for it, educating people on it, helping people where they need to, and we are able to self-custody our Bitcoin. There's many different businesses. Create Strike so that there isn't just Coinbase. Create another option. Create an alternative. Over half the gold is held with custodians, governments, central banks. Not nearly half the Bitcoin is held in the equivalent. That keeps it secure. Okay, Strike questions. Yo, I usually can't make the live streams, but I listen every week. Thank you, man. 2 questions. 1, can we get the personal loan minimum down in South Carolina anytime soon, or should I look into setting up an LLC? You should set up an LLC just because I think they're useful, but yes, we're working on the loan minimum coming down in South Carolina for sure. We're getting there. We just had we had like 3 loan minimums come down last week. I know there's a lot of people asking about Texas, a lot of people asking about California, a lot of people asking about New York. All of those have a chance of going live in Q4. Like, legitimately. Actually, I think all of them will go live in Q4. New York might be the first. Fingers crossed, baby. Fingers crossed. So really exciting. And the second question, is there a plan for Strike to offer any kind of Bitcoin mortgage product anytime soon? Yes, but what do you mean by anytime soon? I wouldn't say by the end of this year, but something we're looking into that I think is really interesting is a line of credit on top of your Bitcoin. So like a dynamic line of credit. Like my dream is that I have Bitcoin on Strike and I hook up Strike to the bills I have to pay. So I owe an HOA on this place. I have a ComEd bill. What else do I have? I don't know. Property taxes, my credit card bill. I got shit. I got a life to live. And when people need money from me, Strike pulls from a line of credit against my Bitcoin. So I don't have to borrow a bunch of Bitcoin for 12 months or a bunch of dollars against my Bitcoin for a 12-month duration. That Bitcoin almost acts like it's like a Bitcoin-backed credit card in a way. So that is what we're looking into first. We definitely plan to look into what we can do in the mortgage space as well. But the point is, we want to increasingly get active in making Bitcoin valuable and making your life better. We want Bitcoiners to have a better life for owning better money. And so when someone asked earlier, like, do you think that big banks are going to get into, like, I don't think big banks are going to be looking at Bitcoin-backed mortgages and Bitcoin lines of credit or a Bitcoin collateralized credit card anytime soon. So we're going to do it. So we're definitely doing line of credit before the mortgage stuff because mortgage stuff is complicated. You got to deal with real estate shit. But we're going to take a look for sure. For sure. I would say potentially 2026. Hey, Jack, how did Strike go with Flash Crash last week? Did people get margin called on Bitcoin loans? No margin calls, no liquidations. I was so proud of the team and the platform. We operated unbelievably well, while many others did not. Hey, Jack, I was looking at Strike UK during the liquidation event, and you guys were allowing us to sell Bitcoin at 80K, but weren't allowing us to buy Bitcoin below 88. What the hell? Wanted to buy the lows, but no bueno. Yeah, I just explained that. That's the spreads we were getting. And the other thing, good point, the liquidity in the dollar, it's the most liquid. Liquidity in the euro is the next liquid. Liquidity in the pound is the third liquid. And so when you have a liquidity event like that and spreads widen, especially when you get further away from the dollar, it gets harder and harder and harder. So we apologize for that. Unfortunately, there was nothing we could have done, but there's ways that we're going to get better. We're going to look into more liquidity providers, and there's a few other ways that we can potentially get better. But yeah, it was a crazy situation. I mean, it was the largest liquidation cascade in the asset's history. Never before has Bitcoin had a $20,000 12-hour candle on a Friday night at that. So the other funny thing is it's a Friday night, so banks are closed. So if liquidity providers and Strike, we need to settle up, we need to move some money around, we literally couldn't. So it was a crazy situation. So I do apologize, although there just wasn't too much we could do. I wasn't, don't take it personally. Like I wasn't doing that on purpose. I was only streaming you guys the quotes that I was getting. Do you offer funding options like PayPal and Venmo? We don't yet. We do offer, so you're in reference to globally, we offer virtual accounts globally. So you could fund your Strike virtual account potentially with PayPal or Venmo or TransferWise with ACH or wire transfer. So we offer virtual accounts, but not like a direct integration with PayPal. Are there any plans to support silent payments? Potentially. It's just not a priority because it's interesting. When you build a company, you get requests for so many things and you end up having to pick like what's the most important thing for us to work on. And so, you can imagine at Strike, we have hundreds of things people want us to work on. And it's a really difficult thing. It's actually more difficult to realize what to work on and what not to work on than it is to actually build it. Like our engineering team has gotten so good. We ship so fast. We build things so quickly. The difficulty is actually what should we do? And so, yeah, I would love silent payments to be on Strike, but it's just way down on the roadmap because we believe that there are better things for us to work on and we base that on, how many people are asking it, how helpful is it to the Bitcoin community? How different does it make us as a business? We don't want to do things that other wallets you can do with other services. Like no one's given you the Bitcoin loans, the quality and the pricing that we are. No one's going to give you a line of credit. No one's going to work with Visa on a Bitcoin-backed credit card. And so that's a lot more of our focus, I would say. But we'll get there. For the future of Strike, can we get Bitcoin yield on our bank account? I'm on River, but I want to support Strike more. You could support Strike by just buying your Bitcoin with us. But, I mean, here's my thing on the, yield on your cash. I don't get it. I don't know. I don't get why I would brag about getting 3% yield on my cash when I can get 60% returns by just taking the cash and buying Bitcoin. So I personally, and a lot of our customers, don't sit on cash and want to yield. So that's number one. For the customers that do have a little bit of cash and want some yield, we've talked to customers and you can get 4 or 5% at Robinhood, for example. So we have a lot of customers that have their cash at Robinhood, and then the yield that they get from that, they just buy Bitcoin on Strike. And so we're not going to be able, the thing is, we're not going to be able to offer higher yield than Goldman Sachs, than Chase, than Robinhood. It's just not our expertise. We're not a fiat company. We're going to be better at all of them at Bitcoin stuff. And yield on cash is a fiat thing. I mean, having it paid out in Bitcoin is as simple as taking the cash proceeds and just buying Bitcoin. Obviously, we can help automate that, but so that's another thing. And then the third is that rates are going to come way down. And so this product was kind of cool when rates were at all-time highs, or the fastest rate hike ever, I should say. And you could get like 5-6% in T-bills or on Robinhood. But if Trump is really going to slash rates to as close to zero as possible, it feels a little strange for us to build that knowing that rates this time next year might be fucking zero. So for all of those reasons, like our customers on Strike aren't really asking for it that much because they just buy Bitcoin when they have cash. And I don't know if it's a long-term feature, like if rates are going to be towards zero. Now, what I will say is people have asked like, hey, River's doing this thing. Would you ever think about that? One thing that we could do is if customers want us to use their dollars, we can give you way higher than the Fed's fund rate. We can give you 7%, 8% yield on dollars by you basically saying you can lend my dollars against Bitcoin, which is obviously 50% LTV. We're over collateralized loans. There's very little to no risk to us as a lender. And if some of our customers wanted to get in on that business with us and say like, here, I'll post some dollars to you. You guys do the whole lending thing and just share in the money that you're making on lending dollars out against Bitcoin. Now that would make a little bit more sense. And we could kill Robinhood on that because our customers are paying like 9.5% for a loan. If customer wants to give me dollars, I'll say, hey, I'll give you guys 7% on your dollars. I'll take 2.5% for facilitating the loan. And then you're making way more yield than Goldman Sachs or than Robinhood. Now that is something I'm looking into, is if you guys wanted to get yield that way. But the whole we're going to do it with a bank based on interest rates doesn't make a lot of sense to me for those reasons. Hopefully that answered your question. But my dream for Strike is I'm one of the best places in the world to buy Bitcoin. Unbelievable wallet with free withdrawals to cold storage, no fee DCA, direct deposit so I can get all my paychecks, no fee converted into Bitcoin. I have a line of credit on my Bitcoin so that as I need cash, Strike just instantly gives me real-time loans to immediately be able to pay bills and stuff. And then we have Bitcoin-backed credit card. And for people that do want to hold cash, you can get 6, 7, 8% yield on the cash if you want to put it in the pool of dollars that we're lending out. Now that's a Bitcoiner's bank account right there. We're really close to that. We're talking, 3 to 6 months away from that. When will Australia get the Strike auto send to BitKey integration? Do you not have it? I'll check on that. I don't know why you wouldn't have it. Anyways, I'll check. Does Strike do direct deposits for business accounts? I can't seem to find it. If not, will you at some point? I look forward to my LLC being 100% allocated to Bitcoin. I don't think we do. But I'm also going to check on that too. Got a lot to check on. When will Strike Australia have Bitcoin-backed loans? We do have Bitcoin-backed loans for businesses. Individuals, Australia is like super uptight about it. Regulations are crazy. So for businesses, we do. So if you just spin up a business, spin up an entity, you can get a loan. Give you a loan, no credit check. Okay. Optional questions. I don't know what that means, but this episode's getting long, so I'm going to just answer a few and then get out of here. Yo, Jack, you said last week that the suits are declaring war against you, and you'd share more about your personal banking situation. Damn, I did say that, and I decided not to. Here's a little tea. Here's a little tea for the loyal listeners out there. Because, I don't know, fuck it. Chase Bank told me, like, get away from us. Like, you are banned from everything, ever. Which is weird. My dad's been a private client for like 20 years. So it was weird. It came out of nowhere. And a little known secret, Jamie Dimon was talking shit about Bitcoin for years, pretty much. And he was talking shit about Bitcoin, and I was on TV, and someone asked me what I think about Jamie Dimon saying that Bitcoin is only used by money launderers and criminals and bad actors. And if you use Bitcoin, you're a criminal. And I said, find it funny that Jeffrey Epstein's banker is trying to educate us on money being used for bad shit. That guy facilitated all that child sex trafficking. Epstein banked with Jamie Dimon. So I'm supposed to listen to that guy tell me about how a distributed moral internet currency is for criminals when he is the one that he's Jeffrey Epstein's banker? I don't give a shit about what Jamie Dimon has to say about Bitcoin. If anyone knows how to use money for awful things, Jamie Dimon is the expert of experts. So I said that on national television because fuck you. Don't try and belittle our movement that's doing good for the world because it threatens you. Don't lie. He then tried to get the media to blackball me. Like, media was saying, we have to take a break from you because people said so. Obviously, it doesn't stop me. I'm a man of the people, a man for truth. I'm telling you guys, I'm just a 31-year-old. I got nothing to lose. Just been in this Bitcoin game for a while. Here for the right reasons. So that happens. Then all of a sudden, I'm getting debanked. The joke's on them. I don't own dollars anyway. And Strike is my bank. I pay my bills on Strike. I get my paycheck on Strike. So it's fine. And I'm sure I can open other bank accounts. But Jamie Dimon tried to get in the way of my career because when he attacked Bitcoin, hey, don't throw stones from a glass house. Don't say I'm a criminal for using Bitcoin if I can't say that, wait, didn't you bank Epstein? I'm not, like, he's making up that I'm a criminal. I'm not a criminal. I'm a good dude. I just like to store my wealth in Bitcoin, not dollars. He lied. I didn't lie. If he came out and said, hey, here's the proof that I didn't bank Epstein. Epstein was actually primarily banked at Bank of America. And here's the proof. I'd tweet and I'd say, my bad. But as far as I'm concerned, all the proof, you banked Epstein. So anyway, I was going to declare war on him and tweet a video and stuff. And then I was busy building all my companies and fuck that guy. Not worth my time. All right. Is my closet the largest in Chicago? I don't know. Probably not. Who knows? Cool closet though. All right. I'm out of here. Long episode. Great episode. Best community on the internet. You and I. You and I and the rest of us. As I always say, I appreciate you guys. Oh, subscribe. We're like 200 away from 40,000 YouTube subscribers, which is a big milestone. So if you haven't, subscribe to the channel on YouTube. I'm trying to spin up Twitch and Rumble and all the other stuff. Clearly not very good at it, though. Not a professional podcaster, so work with me here. But I just appreciate you guys. Subscribe. Leave your feedback in the comments. You guys are always giving me good feedback, and I incorporate it. I use it. The reason the show is what it is because of you guys. You guys have really guided me to where we are now, which is these live streams. So, yeah, I look forward to next week. Peace and love, and I'll see you guys on the internet.